Perfect. So, do I qualify that as a weird week? Probably not. Definitely interesting week, especially with all the talks around Wash, the press conference. We'll come back to that in a few minutes when we look into the bonds for a change. But if you just pay attention to the S&Ps in stock and VIX overall, you may be thinking that, it's nothing burger and pretty much everything's the same and there's no reason to panic. And yeah, like overall, that's true, right? You have VIX that close at 16, which in general, 16 is, nothing major to see. So you shouldn't invent problem when there is no problem whatsoever, right? And VVIX is at 91, something like this. So when you put it in context of the last year or so, like we're pretty much on the lower end of both distribution, and when you put into context of the broader distribution, we're pretty much in the place where, yeah, like it's VVIX 90 is pretty much the long-term average, and VIX 16 is below long-term average. So the market is not particularly tense, not particularly worried, at least on that first day of August. Things can change quickly, and we've seen it, right? We went from VIX 20, I think, did we see 21 on Wednesday? We didn't see 21, but we were very close. We must have seen like 27, something like this. I think I saw 26 for sure. I think 20.6 was the close. And if you ask me on Wednesday, I was pretty convinced that Thursday, uh, subject that you would have like bad inflation number, that Thursday would have been a pretty problematic day. But surprise, surprise, no problematic figure Thursday morning. The earnings of tech stock were fairly okay. We learned that Kenny G bought a few billions of shares and then everything was forgotten. So you went from 20, which is right here, right? Again, if you put it in the distribution of the last year or so, we were on the higher side and we went from the lower percentile in a matter of 48 hours. So you can obviously, and you should obviously look at this and think right now the market is not particularly stressed, but like to build some intuition around stuff and the kind of things we do here, moving so quickly from here to here is not necessarily a good thing, right? That is pushing vol a little bit on the higher side. It's not to say that like we should panic because all of a sudden vol is picking up, but it's not. It's usually more a sign of be a bit cautious of what's going to happen over the next few weeks than, yeah, it's just VIX 16 and it's perfectly stable at 16 and nothing happens. That's probably the kind of regime that we want. If we have to say volatility is low, I'd rather see volatility low for weeks and eventually wiggle a little bit. But doing those wild swings where you go from 21 to 16 in a matter of 48 hours, yeah, the market is not stressed, but it's not this, right? It's not these days. Right now, I put it in perspective, that's what we do. Right? We stay low for a bit, I mean 15 for a bit, then we go back to 1920, back down 1920. And of course, this is in the grand scheme of things, right? Even if we have a few days of stress in July, in the grand scheme of things, it has nothing in comparison to do with what we had even in November last year or October, right? When you had two big, almost like not really regime shift, but after months, after weeks and months of really nothing happening post Liberation Day, which is really this, you had those two big spikes. Now it's again something slightly different where it goes up a few points, down a few points, and all in all, this is still much more manageable than something like this. I know that some of you were already in sharp two when you'd see those big moves, VIX 26, VIX 27. on thesis that back then it was already the AI crisis, right? I mean, the AI crisis, the AI thesis, saying that all these companies have borrowed too much, that you have circular funding, blah, 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 so it's going to crash. Okay. Crash hasn't happened yet, but in the meantime, you have developments around Iran, obviously, around China, because it's a weird thing, right? Like now you have the China geopolitics, especially the China around Chinese model that tend to have an incidence on how tech is going to react the next day in the US, and therefore how tech reacts, vol might react. And it's interesting to follow to follow all these things. So again, grand scheme of things, you're roughly here, VIX 15, 16. There's no reason to panic, but you're not in a VIX 16 where it's completely flat and you can just sell options and then forget about it. Right now, we're much more alternating between calm and stress, calm and stress. How does that reflect? If you look at the traditional stuff, you look at the term structure, right? Well, that's the first leg of the paradox. You have a perfect contango and nothing burger, nothing to be concerned about. And indeed, you should, right? I'm not saying, okay, something catastrophic is gonna happen over the next few days or next few months. Right now, that's not. If you just take the picture on Friday, that's not what's priced into the marketplace. If we had even something a little bit flatter, I would probably say something different. But if you just look at this, you're thinking, okay, nothing on the horizon, at least for the next 30 days. Let's see what happens after Jackson Hole and after President Day at the end of the month. The other way of looking at it is this. So it's not, it's volatile, right? It's not terrible yet. We're right in the middle of the range. And here, especially when you have those wild swings, because this is what volatile is, right? It's like when nothing happens, volatile is going to be completely flat overall. It's going to be on the lower side. It might spike once in a while, but it tend to be on the lower side. Let's start again with the obvious. Let's not invent something that's not there. Vol at the moment is probably in the 50th percentile of everything we've seen over the last 2 years, which is pretty consistent with um, with other metrics that we're looking at, like nothing crazy. But since post-Iran war, when we went really low, we haven't gone terribly lower. And I repeat what I said throughout the month of July. This is the month of July. Normally, the month of July is a month when nothing happens, everything's super quiet. You don't see those wide moves. You don't have those crazy headlines about Korean stock market losing 10% and taking again 10%. It's I'm insisting on these things because I'm really trying to highlight the paradox between, on one hand, you have a VIX that's fairly calm, and I don't think anyone should panic. But at the other end, compared to a year ago, you don't want to ignore the fact that around us there are some big movement happening that at some point may have some much more dramatic consequences than what we've seen. Like the reversal on Wednesday, that was interesting, but at the end of the day, nothing really broke. We haven't seen any day so far in the US stock market where something you can say that something was broken, not even during the Iranian war. The closest that was a little bit weird was probably in June, when people were probably getting rid already of those tech stocks. But you didn't really have a headline, and you didn't see like constant selling pressure for days and days and days. Is it coming? I don't know. I'm just saying that, like, yeah, compared to a year ago, it's a complete different regime. It's just the month of July, and obviously August, you should expect volatility to pick up a little bit. And this is not, I'm not trying to make a big thing of something that isn't there, but yeah, like it keeps picking up, right? And you look at the prediction we make on realized volatility. It's been a while that I haven't seen, for a few days or weeks, that prediction of realized vol being constantly for a few yeah, for a few days or a few weeks below 15 and stay there. And right now, like we're at 13 for the entire month of July. That's not high. Once again, let's not try to say that, okay, it was a crazy month. But in July, I'm more used to see below 10 and really below 10, like 9, 8.5, than at 13. This is last week. Again, in the grand scheme of things, 15% over 7 days. It's nothing to talk about for hours. The interesting bit here for me is that it's happening in July. If it was middle of September, I'd tell you guys like, yeah, it's just a normal week in the year. The fact that it happens during the holidays period or when things are a little bit calmer is interesting to me. If we go back to what we sell at VIX 16, you may want to fold. I think at 18, 19, it makes sense, but 16, you don't need to put yourself into trouble. Avoid again being there. Like we had a conversation with Sam a little bit before that call started. Yeah, you're going to be short options in the front few days. Unfortunately, with realized vol being relatively high compared to what those options are paying, you're more likely to wake up with having to pay for gamma than the other way around. So I'll be a bit careful. And if you have to jump, it's pretty much the same modus operandi, right? Like, obviously, this regime is a little bit scarier than that one that we had last year, which was really fantastic. Nothing was moving, it was perfect. You just sell options day in, day out, and you just collect. This one is obviously a little bit more scary because every time it goes to 1920, you're thinking, oh, okay, my God, is this the moment where it goes to 26, 27 in 48 hours? Because it can, right? This is a good reminder of about a year of stock market data for last year. You have one, two, then this big period here. You have two meaningful spikes and a pretty long period where we stayed at like 25 plus, and it was not really nice to manage. So every time you have a moment like Wednesday where we get above 20, obviously everybody's going to be thinking, okay, is it going to be going to 25 this time, or is it not going to be going to go 25? I think you should jump in when you have those back and forth right now, and those moments are really good for that, because all in all, even though vol is going up, even though vol can spike sometimes, realize is still at 13, 14. That's still manageable. The day it goes above 15, 16, or even higher, like what we had over there, yeah, like you're probably gonna have different conversation. So don't drop on VRP harvesting right now when you have 2 points at 30 days. I think it's a little bit silly. What's likely to happen? Um, and it's interesting, right? Because most of the time, what I say is it's extremely complicated to time a long vol moment and a long vol trade. Now, you look at the distribution for about a year, we usually don't stay very long under 16. And also, the good thing is we usually don't stay very long above 20, right? So right now we're below 16. I would say just wait. Probably gonna see 17 and a half, 18 for whatever reason over the next few days. You have AMD, you have an NFP this week, probably a little bit of build up, maybe the next headline of Trump saying that Iranians are being unreasonable, and you have something to exploit again. But don't jump on those prices, and don't think because it's back to 16 that nothing is bring up, right? Yeah, it's a very nice contango. I get it, but be a bit mindful of all that risk. Still, pick S&P over the Qs. Qs, the situation is even more horrible over there. In gold, that's your realized vol. In blue, that's your variance swap. So literally the implied vol you will be selling if you were selling options over there. I mean, technically speaking, the entire strip of the money option, but already a pretty decent proxy. You don't have any VRP at the moment in there. And if you look at it in the super short expiries, then it's probably deeply negative. Let's have a look at this. Yeah, that's what that curve was showing. If you're gonna go there, you're not gonna get anything. If you go there, it's not gonna be great for you. So is it worth to buy some gamma? I saw some conversation in the Discord about this. I think it is. Then whether you try to scalp it or I don't know how you guys build your book, but these days, more often than not, we wake up with stocks, especially tech stocks, up 1.5%, down 1.5%, and it recovers throughout the day. I would still refrain from doing anything directional, but if for whatever reason you have a period of the week where, like, we'll see tomorrow, right? But VIX is really low, vol prices are very low. Why not buying 7 days out? Don't pay at the money because it's really expensive, but yeah, take a 10, 5 delta and then see where it goes. At some point, you might have that movement that's gonna get you to maybe get 40, 50, 60%. And then sometimes, like, yeah, if you can manage to capture a big move, then it pays for some position where you might be short vol. And maybe you don't have that much short vol overall and you're just looking for a position, but avoid paying too much data basically. Um, and by that you just go delta 10. Obviously if things move, you'll be a little bit less compensated. Um, yeah, so there's no VRP. Realized vol in the queues is still high. It came back down from what it was early July, right? We went from 30 below almost 22, I think. We're back to almost 25. Again, if you put it in perspective, it's still very high over the last 2 years. And as long as I see it here, you're probably going to hear me yap about vol in tech and the Qs because it's not right. You want to be data driven. It's not normal. It's really high. It's much higher than usual. We're still easily in the 70th, maybe 80th percentile in realized vol over the last 2 years in the Qs, and we're just in the middle of holidays. So maybe over the next month or so, it comes down and it comes back to some much more reasonable level below 20, and then we forget about that period. But until we're there, let's not anticipate that it's going to be here, right? One of the misconceptions about vol is that, oh yeah, it's mean reverting, so it should come back to that level of 18, 19. Absolutely, it should. But the mean reversion is much more short in the time frame, right? Volatility clusters. And if these days it's been clustering around 25, between 25 and 30, it's more likely that this is what the actual risk and the actual price for volatility is these days. So absolutely no, let's not sell any options at 25 in the queues. I don't think this makes any sense. If you see above 30, 32, 33, 34, and you start to see a little bit more VRP, why not? But as usual, not changing my tune regarding tech vol for July. There are much better things to trade, and let's see what they are. So first of all, one that we don't talk too much about, and to be honest, I'm not saying it's like catastrophically scary, but something you can tell that the market is slowly getting ready for something that may be happening more or less soon, right? You don't jump from implied vol below 10 to 13 post FOMC, right? Usually you tend to see these things happening before the FOMC and then the vol goes down because the chairman has said whatever he's supposed to say, the market feels a little bit better about stuff, things calm down. Here, when things were coming down in equities, going from 20 to 16, the opposite happened in the bond. We went from 10 to 12. Can it go higher than 12? Absolutely, right? But now it will need some catalyst to go above 12. So over the next 2 weeks, I think some Fed speakers are still supposed to comment what happened last Wednesday, but then really it's going to be Jackson Hole in about Now I think it's 25 days from now. I think it's the end of the month, 27, if I'm correct. Um, I would assume that over the next 2 weeks, being short vol in bond is probably okay. But we want to pay attention to two things to mean bond. The first one is, well, is realized vol picking up? So far, it's not. The big paradox in the bond is I've never seen that in the bond, right? I don't usually put my trades on bond because it's a little bit boring as a product. Most of the time, you have VRP because it's not moving too much. But 4 points VRP in TLT, I've never seen anything like this. It's not bonds is not something I trade on a regular basis. I'm much more active in ES than ZB and all this stuff. But once in a while, I put some trades in there. It's very rare for me to see every expiration like this with 4 points in this score. You this score two. If you put that trade on over the next 2 weeks, I think you're fine. You're probably going to be okay. Then there's Jackson Hole. Then there's another FOMC meeting. So you want to manage when you're going to be exposed with which event are coming in. And you want to remember this, right? Like usually you sell vol ahead of the event and then it's okay. But the market is pretty much trying to figure out how the new chairman is working. And here you have a perfect example of the market's not okay with what just happened. Vol went up, it went up after the fact. So if you have to be short going into the event expecting that it goes down, well, give it maybe Jackson Hole and the next FOMC to see if the two manage to reconcile their differences, right? The way Wash is talking and what the market is expecting. Maybe they manage to reconcile their differences and then things are okay. Ideally, because we talked about this 3, 4 months ago, I used to tell in the Discord to be long vol in the bonds. Um, if you are long, I think Nimish asked me the question actually. So I'll at least answer to Nimish. Yes, you'll see on the put side that they start to print a little bit of money. I wouldn't sell them now because here is what the whole surface looks like in TLT right now. And same, you don't want to make a big thing about something that isn't there yet. But this term structure, this volatility surface, sorry, is very telling, right? Your skew is basically concentrated on the put side. The rate is going up, the price is going down. People are buying puts, and it shows that people are really trying to hedge their downside. If you want to have a comparison with what it was exactly a month ago, it was like this. A complete different picture, much more relaxed, the kind of like vol surface that, is a little bit more normal. You progress over time, things get more expensive. Usually puts are a little bit more expensive than calls. Okay. This is now after Chairman Wash has spoken. Um, so yeah, like don't be completely blindsided by what just happened in equities. The bond market is extremely important. Same, we talked about this in the Discord. Um, for a lot of people, because the bond market has been, let's be honest, it's been fairly quiet for well, since inflation really, 2022, 2023. Since 2023, it's been fairly okay, right? You had all of those macro theses and views, always calling for like the craziest stuff happening in the bonds. I'm not saying we are about to see it, but at least the market is getting ready for if in 30 days something weird is happening. And it's not just 30 days, right? Like if you put those numbers in perspective, okay, here 2 years out, they're a little bit more normal, but up until 3 months, 6 months, people are very happy to buy puts. No one is believing whatsoever that they should be buying calls, and therefore that the Fed is going to cut rate. There's also some opportunities, right? It's important to see what the market is paying attention to and the way it's positioned to potentially identify some places where it could be taken by surprise, right? Like if magically the inflation numbers were still very good over the next 2, 3 months, and if magically the US economy was starting to show some job report that are not catastrophic but not too strong, then I'm pretty sure that those goals that yeah, a year out, pretty sure that would be interesting. So as usual, you want to navigate between what's the narrative driving in the market right now, what are people buying, and here we're in a situation where it's extremely clear what they're buying and what they're not buying. Could you do some long-term risk reversals where you may be selling a few puts here and then buying some of that stuff? If you have some edges, why not? But honestly, that press conference was really weird with what happened. I would give it a little bit of time before starting to sell vol, especially on the tails. That spike can keep going up. We need to understand this kind of spike, right? You can look at it and say that we're still on the vol side, we're still on price discovery mode. Are we really going to stop at 13? I don't know. Are we going to stop where it's more like halfway through 15, 16? Yeah, most likely. But again, I don't know. Maybe end of next week we're back to 10. But if we're back to 10, and I'll finish on that one. You remember how I was saying, okay, on SPY, let's not make out of nothing or something very average a problem. That implied vol, that volume of implied vol in TLT is not a problem yet, but you look at the distribution, yeah, we'll start to be on the 80th, definitely 70th percentile. And yeah, it can keep going up from there. It's going to be interesting to see how it happened. And overall, vol going high or going on the higher side of the range is definitely more a sign of a market becoming stressed and becoming more stressed than the market being relieved and no problem at all. So I wouldn't necessarily be too fast in selling Delta 5 or whatever. Let's see what the next few weeks have in store for us, especially I would say the next 2 months, right after Jackson Hole and September, especially if there is no rate hike. People are probably going to start to scratch their head a little bit. But in the meantime, if you're looking to buy some stuff, that is not necessarily the scenario being priced right now. Yeah, you go 9 months out, you buy a few calls in the bond, and you see what happened at 10 delta. They're probably not that expensive. That's it for me. If you guys have questions, as usual, I'm happy to answer.
Yeah. Hi, Ax. Any, there's a lot of yen intervention at the moment, or the last few days anyway. Do you think that's going to have you said that, maybe something might happen in August and so forth. What do you reckon? Could that be a catalyst?
Yeah, potentially. To be honest, once again, like I'm just it's a difficult situation because I'm not trying to say something's gonna happen, but you have to pay attention to the tiny clues. And you have to pay attention to the paradox. In the equity, you have a strong contango and you have a normal vol in SPY, but you look at the cues, realized vol is through the roof, not going down, right? You pay attention to TLT, vol is going through the roof. Sorry, vol is going high, implied vol is already high, realized vol is very low. Okay, that's TLT. We haven't even talked about TLT, but TLT is another interesting one where the vol is pretty high. Sorry, not TLT. That's That's Uzo. We haven't talked about Uzo. Vol is pretty high. Realized vol is picking up, but this one we're used to it. You look at those four asset classes, you go from the most normal, which is SPY, then all of the other ones have a little something that is enough out of the ordinary for me to pay slightly attention to. And then yeah, you have those crazy situation in Asia where we learn how much did they spend? 50 billion, and it was in conjunction with the US with the US Treasury. It's yet another little something. So I don't know if yen is going to trigger. So I think you were saying that like yeah, you're scared of um, a rate a hike in rate in Japan. I think it's expected, to be honest. If they don't, it's the same as wash. They're going to start losing credibility. So there's enough there's enough little there's enough little stuff in the data so that if something goes wrong in the real world, it can it can evolve in the wrong direction, right? Like in the in the bond, it's pretty obvious. Bond market is expecting a rate hike at some point. If they don't get it, it's gonna stink. Can the yen have some sort of influence? To be honest, up until now, all the thing that is happening is expected. Everybody was expecting at some point that an intervention would happen. Everybody's expecting a rate hike. Okay. What if they don't? To me, it's more this kind of situation, right? What if early October, inflation is still going up in Japan and they still not hiking? What if inflation they can't fake it in the US and it's still going up and they're not hiking? How is the market going to react? I'm more looking right now for a slow building up pressure over the next few weeks and months potentially, than something abruptly breaking. But by definition, it's very hard to predict when something abruptly break and then you have tremors over all over the marketplace. But yeah, like I'm going back to this one. Yeah, it's the kind of stuff I pay attention to, right?
Mm,
Wash just spoke, you still see implied vol going through the roof in the bonds. Okay, yeah, let's pay attention to that much more than the yen.
okay. Um, yeah. Did I understand you correctly before you said that in very short dated, so literally like zero dated, zero, a few days out maybe on SPY, the
Yep.
VRP is negative. Did I understand you correctly in saying might be better off buying, uh, buying some straddles rather than selling the things?
Yeah, pretty much, right? I think it's been like this for a while now, where especially if you have to pick one asset class, I would do it in the queues,
Okay.
because more often than not, you wake up in the queues and then it's up 1-2% or it's down 1-2%, and it doesn't necessarily stay there. I don't think you should buy at the money because it's really expensive, and if nothing happens, then okay, you paid a lot of money for nothing. But I would definitely not sell those 7 days out unless you have a very good reason to sell them, and you have situation where you have good reason, right? Like in the Discord, we have that signal for overnight trades. Like, yeah, I'm not saying you should never sell it, but you should wait for the right market conditions. And usually, the right market condition is realized vol was really high the last few days, it's gonna come down, and the market is overpricing the straddle. Most of the time, it's something like this. Right now, would I go and sell stuff early in the week in the queues? There's an FP, right? There's an FP and AMD. Yeah. Okay. I wouldn't do it. I think there's easier trade. This is easier stuff to trade. For me, it's always a matter of opportunity cost. Why would you go take the risk like coin flip when clearly the odds are not amazing? You don't have a lot of margin and something can happen when you can. Not saying it's not without risk, but you can go trade these guys. It's a little bit more obvious. Okay. I'd rather be trading the obvious stuff.
Yeah, yeah, fair enough. Yeah, I can understand that. But given that, why did that thing fire then? The the overnight
Yeah,
trade?
yeah, yeah, the overnight trade. So
Yeah.
again, precisely because of this. So it's a weird. The super short dated stuff do not work the same way. That it's a part of the curve that's different from 30, 35 days. So here, what matters really is that you have a realized volatility that overall is fairly stable, right? Vol of realized vol tend to be smoother the further out you go in the tenors, right? Usually, let's have a look at that one. Obviously, it can move a little bit, but overall, it's pretty smooth. Now, if you go, sorry, that's not the one I was looking for. Let's take just 10 days, for instance, in SPY. You'll see that it's much more, you know what I mean? It's much more wavy. It moves a lot like this, right? The mean reversion is much faster. So you do not trade this part of the curve, like 30 days and plus, the same way that you trade 3, 7 days. So the paradox is, I mean, it's not really a paradox. It makes a lot of intuitive sense. You have moment of short-term, very intense days, right? And usually those very intense days, they are followed by period of relative calm, right? So this kind of signal, what it does is it looks at is realized volatility on the super short dated stuff stretched, and is it too stretched? And if it's too stretched, then yeah, you look at that chart every time you peak. Well, next few days tend to be a little bit calmer. It doesn't mean that overall things are not going to be, that week or that month, things are not going to be a little bit moving more than usual. But in the super short dated stuff, like if you have 18 over 5 days in SPY, usually the next few days they're a little bit calmer. It doesn't work all the time that way, but if you start building this score on this stuff, then it start to work. And here, well, you have 18, right? So it's not an absolute level that you should be paying attention, and normally you should be building a z-score out of that stuff, but that's pretty much how the model in the overnight is working. It's the article I wrote a while back now. Yeah, realize what is high in the super short dated stuff. Is it likely that it's going to stay high? Unlikely. Now, in the grand scheme of things, so longer period of time, maybe 30 days. Yeah, it's not low, it's not 10, it's 13. So yeah, you have this back and forth. And basically that stuff triggers when, okay, the last few days have been, and you look at Wednesday, Thursday, Friday. Friday was crazy actually. Friday we took what? Almost we did 100 points reversal in SPY. Yes, we did. We
Wow.
had futures at 525 in the morning. I looked at some point in the afternoon. We're at 425 and back to 525. So like obviously short term it was moving a lot. Is it gonna be moving a lot over the next few days? It could, but probably not over the night between now and Monday, so over the weekend. Probably not. And if you do that enough, basically, yeah, this is what you're trading, right? You're trading this mean reversion that tends to be much faster than the mean reversion you see at 30 days.
Okay, great. Final question, if I may, and that is, when you do the models, for example, what you're just talking about now, is that based on then end of day? But yet, when we do an overnight trade, you say, and I agree, that we get out before the close, before the open. Sorry.
Yeah.
So, is there a bit of a mismatch there?
No, no. So those signals are live. So the platform is still the platform is still, especially this stuff, it's still end of day, right? But we're slowly and surely moving towards stuff that are much more live. The stuff that you see in the Discord, that definitely live. So basically, I'm taking what's been happening throughout the day, recompute stuff, and then I'm able to put a signal out. And over the next few days, weeks, the first next thing we're releasing that's going to be live is the vol surface. So you'll be able to see throughout the day the vol surface, its Z-score, how it's moving.
Right.
And the thing that I'm working on pretty hard right now to bring to you guys live is this, like so that you don't have to wait the end of the day, of the next day, basically of the previous day to know what's going on. So it's a little bit of work, but now with the help of AI and the amazing guys that work with me, it's easier to conceptualize and to deliver. So this one I'm not committing any time, but the Vault Surface you should see it as a live tool over the next few definitely weeks, within the next probably by the end of this week. This one I would love to have it ready for somewhere mid-September, but let's see. So yeah, so the stuff I'm putting in the signals I'm putting in the Discord, they take live data and we're basically rolling out much more liveness into the platform the on the
Right.
on
Okay.
the UI side.
Right. Great. Wonderful. All right. Thanks for that, Alex.
You're welcome. Right, well, thanks guys for joining, and I see you overall in the Discord.
Thanks,
Bye.
Alex.